you've been trading Forex for a minute now, and because of everything that's happening recently in the industry, Forex gurus getting exposed, Forex prop firms getting exposed for scamming, unregulated Forex brokers getting exposed for scamming, you now have no idea what to do. Most Forex traders, they're just switching to futures. Me personally, I've been trading futures for almost 2 years now. I switched to futures a long time ago because I saw all of this happening before it happened. So with that being said, in this video, I'm going to be showing you guys the difference between trading Forex and trading futures. And if you stick around to the end of the video, I'm going to be showing you guys a very easy way that you can calculate your risk on futures. All right, guys. So like I said, I've been trading futures for a minute now. I still trade Forex pairs. I just trade them on the futures platform. So yeah, we're going to talk about the pros and the cons of Forex versus futures. And like I said, I'm going to show you guys a very easy way to manage your risk. So let's just hop right into it. I want to make this video pretty quick and to the point. Let's just talk about the difference between Forex and futures. This is just my personal opinion, so don't be trying to crucify me for saying this stuff. Yeah, I'm going to just give y'all my opinion based on my experience with Forex and futures. So let's just talk about the pros and the cons of Forex and futures, right? So the first one I have marked here is the prop firm faster payout. This is a huge thing because I know a lot of people that's trading, they're trying to get access to a larger amount of capital so they can risk smaller and it still be worth it for them. Also, if you were smart, you would be trying to build your live account based off of the payouts that you get from a prop firm. So they have a faster payout system than futures. As soon as you get funded with Forex, you can pretty much withdraw whatever amount of money you make. With futures, it's a little bit different. They have a lot of consistency rules where you have to make a certain amount of money for a certain amount of days before you can withdraw. And it makes it harder to get a payout, I'm not going to lie. But if you're a consistently profitable trader, it may not really bother you. What else? Forex, you have more leverage, right? You can make more money with less money. With futures, you got to have a little bit of a bag to make some real money. Now, don't get me wrong. You can still have like a decent size, like $2,000, $3,000 account, and you can grow that over time if you already are a consistently profitable trader and you have the skill set. So that's not a big thing, but I'm not going to lie. I would like to be able to have a payout as soon as I reach the amount I want to reach. With futures prop firms, you have to build a buffer. So that kind of sucks. Let's talk about some of the pros for futures. Regulation, right? You can trust them because they're regulated by the CME. Most brokers are, most prop firms are. You can trust them a lot more than Forex just because they're trading pairs that are on the CME group, right? With futures, everybody's trading the same charts. With Forex, your broker's chart can be different than the prop firm's chart. Like it's a lot of manipulation there. So that's definitely a pro for futures versus Forex. Now, the prop firm cost is a pro for futures compared to Forex. Because with Forex, for like, let's say a 100K account, you're probably going to pay anywhere from like $300 to $500 for that account. And you're going to have to pass a couple of phases. With futures, for a 100K account across pretty much all of the popular prop firms, you only have to pay $100, but you have to pay it monthly. In my opinion, right, you shouldn't be taking longer than a month to pass these future challenges. For Forex, yes, because it's usually 2 phases. And those 2 phases are usually like pretty high. With futures, it's with their prop firm, it's a 1 phase of only 6%. So you should be able to make 6% in a month, in my opinion. So let's say it took you 2 months. Then you're still only paying the entry fee twice. So you're paying $200 for a 100K account, and you have 2 months. That if you can pass it in 2 months, and that's a lot cheaper than like $300 or $400 or $500 for 2 phases, right? So that's a pro for me. A lot of people don't see it that way. They see like they don't understand like having to pay monthly, but like if you're paying monthly only $99, you would have to take 4 months to make 6% to pay $400, right? Where on Forex, like if you pay $400 for that 100K account and you fail it the same week, then you're just out of $400 and you got to pay it again. So yeah, the resets on prop firm, that's a futures pro too, because the resets, you just have to pay the initial entry fee, which like I said, for 100K, it would be $99. For 50K, it's only $50. And also with futures prop firms, they always run a lot of sales that'll give you like $25 resets, $35 resets, 50% off the reset. Like So they like look out for their traders a little bit more in that aspect. Another pro for futures is this less manipulation on the charts. Like I said, futures is regulated by the CME group. So all futures brokers and prop firms, they're usually all on the same chart, right? If I was on a Forex prop firm or broker, I click on EU and I might get 10 different charts, right? Because futures is regulated by the CME, there's less manipulation. So it's just a cleaner market, right? A gentleman's market, as they say. Now let's talk about some of the cons, right? The cons in Forex is you have the trust factor. It's been a lot going on with these white label unregulated brokers and these prop firms, and they getting exposed, right? The top prop firms are getting exposed. The top gurus are getting exposed. The top unregulated brokers are just shutting down and running off with people's money. And it's just ugly, right? It's hard to trust a Forex prop firm these days. And that's just the reality of it. What else? The challenge cost, like I said, is expensive compared to futures. Also, Forex has multiple phases. They rarely only have one phase. Some of them do now, but they haven't always had it. It's mostly two phases because it's harder to be consistent for two phases, right? You have to pass two phases and then you have to build the money up to get a payout. So it's almost like three phases, right? Whereas with futures, you just have to pass that one phase, usually 6%. And then you have to like build a buffer to get a payout or be consistent for a certain amount of days. So it's almost like two phases. So I think that's a con for Forex because their evaluations are way harder. They're more expensive. So it's more of an investment. You got to hit multiple phases. I mean, half the time the market is not even consistent for 2 months in a row. So you got to deal with those multiple phases with Forex prop firms. Unless you can find a good one that only has one phase, then that's good. What else? There are no resets on Forex prop firms. If you lose the same day you deposit $400 and get that 100K account, then if you blow your account that day, you got to buy another one. So you got $800 versus with futures. If you blow your account the first day, you just got to pay the reset fee. So that $200 is way better than that $800. The spreads is definitely a con on Forex because these white label brokers, they make up whatever type of commissions and spreads they want. They're not regulated, so they can just pretty much do what they want. And that affects your psychology. It affects what else as a trader? It affects your money management, your risk management, a lot of things. So you don't really see that with futures. So let's talk about some of the futures cons. The payout system is terrible, in my opinion. I don't like the consistency rule. I get why they do it. They come off as like they want us to be consistently profitable traders and da-da-da-da-da. But the reality is they want to give you more time to blow your account. So you have to keep that in mind, stay focused and just stay locked in and just grind your way to the payout. With futures, you can't really just like get lucky like you can on Forex. With Forex, you can over leverage and get funded pretty much in one trade. You can do that on some of the futures prop firms. Damn sure can't do that to get a payout, right? They're going to make sure you're consistent with a futures prop firm. And I don't really like that. I'm a consistently profitable trader, so it doesn't bother me. But if I make my money, like let's say I get funded and I make $500 and I need that. I want that. I don't want to have to wait 15 days to withdraw that. So that's annoying. And then the risk management is a con for futures. I'm going to show you guys why. But if you trade like I trade where you scale into positions, like I don't put all of my initial risk on my first position. I usually scale in as prices respecting order flow in my favor. So that can be a problem with futures because of the way that they handle their positions when it comes to like taking partials and whatnot. So that's just my opinion on Forex and futures. Either way it goes, they both have pros and cons. I would still trade Forex on a Forex broker or a Forex platform if I looked into it and I felt like I can trust it. Yeah, I love futures for right now, but I also love Forex. So I don't have an opinion on which one I would rather trade, but I'm trading my real money. So I do want to trade with a broker that I can trust. I'll just say that. So yeah, let's just get into it. Y'all already know about Forex. So I'm just going to talk more about futures because a lot of people are trying to switch to futures. There's not a lot of videos out there from people who've been already trading futures that are trying to introduce Forex traders to futures. It's just a lot of videos from Forex traders that are recently moving to futures and they're telling people it's the same thing when it's not. It's a night and day difference. So let's just talk about the risk management on futures, right? The difference between the risk management on Forex and futures is Forex, you're really deciding what you want to risk per pip, right? With futures, you don't decide how much you want to risk per pip. You can decide how much you want to risk per trade, but everything is based on the contract cost. And every pair in futures has a different contract cost, right? It's not like where you can go on NASDAQ or EU on Forex and you can say, I want to risk $5 per pip. It don't work like that with futures. Like, you got to risk what you can risk depending on how much money you have on your account and depending on which pair you're trading because of the contract cost. Let me show y'all what I mean, right? So if you're trying to discover the contract cost for the pair you're trading, you have to go to this website, the official cmegroup.com, and then you click on the specs of the pair you're trading, and then you're going to look right here. So the NASDAQ mini, right? I primarily trade NASDAQ and I trade Forex pairs like EU, right? But I trade on a futures platform. So with the NASDAQ, they have a mini and they have a micro. Mostly every pair in futures has a mini and a micro, and that's to help people manage their risk, right? So the NASDAQ, it's $5 per tick, which is 0.25 index points, right? It takes 4 of these index points at 0.25. It takes 4 of them to make a whole point. So when you're looking at a long or short position and you see these numbers here, right here, you see the stop 146, that's the points. The number in the middle, 585, that's the ticks. So you got to know this is the difference between Forex and futures, because a lot of the Forex gurus, they're just saying, oh, it's the same. Oh, it feels like it's easier. I'm seeing this a lot on futures, right? I'm seeing this a lot on people who are making this video. They're saying it's easier to scalp and trade on futures, but that is just not the case. The reason that it feels easier is because you're not paying attention to this. You're not paying attention to the contract cost. And of course, you're going into profit faster. It's because you're over leveraging and you don't know it. So you need to know this, because the number one thing in trading is capital preservation, right? You need to be able to manage your risk. So like I said, 4 of these equals 1 point, but it's $5 per tick. So every contract is different. The micro contracts is not $5 per tick. It's cheaper. So I would advise anybody, if you're just starting trading on futures, to trade the micro contract to get your feet wet. And until you learn how to manage risk, stay on micros, and then you come with the minis. That's just my opinion. So now that you know this, I'm going to show you guys an easy way to manage your risk and to calculate your risk before you enter your trade. So let's get into it. In Q1, that is the NAS mini continuous chart. If you're going to trade the continuous chart, then you need to right click trading view. That's another pro to futures versus Forex too. You could trade directly on trading view. I forgot to put that in the pros and the cons, but with futures, you could trade directly on trading view. And why that's big for me is because when I used to be trading on Forex platforms or Forex prop firms, I would always mark up my charts here on trading view. But when I would go to enter on MT4 or MT5, the price would be different. So I would deal with either some slippage or just something not as accurate, right? With futures, like I said, I trade directly on TradingView, so I don't have to switch a bunch of different screens and stuff like that. Like, I don't have to worry about the price being as manipulated. And if you're going to trade the futures continuous chart, you need to make sure that you have this on right here. Adjust for contract changes. That way, if the contract rolls over, it'll still show you the correct price action. So the micro charts, okay, y'all can't see my watch list. The micro chart would be M in Q1, right? So that way, if you wanted to have more control of your risk or risk less, you would be trading this chart. So let's just go back to the E-mini NAV chart. And let's say, let me see here. All right, so let's say you wanted to take this short here, and you want to put your stop loss over this swing high. Target don't really matter, but I'll just drop it out here. So this is the thing, right? If you're trading on TradingView, you're going to look up in this left corner right here. You see how these are blank, like they're white? If you are actually logged into your broker, then these will be blue and red. That's how you know you can trade the contract you're looking at. I'm currently not logged in right now, so that's why these are white. So if I wanted to trade, you see here, I'm clicking it. I couldn't trade. It actually asked me to log in down here. And that's how you log into your broker too. You grab the bottom and scroll it up, and then you can log into any of these. I suggest that you start here with paper trading just to get your feet wet for futures, because it is a difference. So let's just talk about the risk management. So let's say I want to put my stop loss over the top here, enter here, right? What you would do is you want to right click this and you want to go to settings. Here you can put in your account size, make sure your lot size is 1, and you can risk whatever you want to risk here, right? I have $150 in, 5K account, and you can either risk by the dollar amount or percentage. So if you want to do percentage, you see 3% there, you can do that. I usually always do the USD because sometimes, I don't know, I don't really be messing with like the percentages on here because it'd be like, I don't know, it'd be weird sometimes. But this is one way you can do it, right? What I do is I do this and then I click template and I save as a template. You see I have templates here, 5K, $150 a trade, 20K, $555 a trade, 100K, challenge 1%, 100K, 0.5%, right? So that's one way you can do it. Let's say we have a 5K account and we want to risk $150 per trade. So you would click that on, and then what you're looking at is you're looking at this tick amount right here, 91 ticks, 22 points, right? 22.75. So this is saying 0.33, right? That's basically telling me I'm over leveraged if I try to trade this with this big of a stop loss. Now, if I move my stop loss, let's just say at some random place in here, you can see the number quantity starts to shift. So I would want to get that to like 1. Okay, so 1 contract right here, right? I would never put my stop loss nowhere random like this, but I'm just showing y'all. Now it's at 1 contract that I can use. So right here in the middle where it says 0.5, I will put that to 1. I can't do it right now because I'm not logged in, but you would change that to 1 contract or however many it says on quantity, based on where your stop loss is. So now you see I have a 30 point or a 30 tick stop loss with a 7.50 point stop loss. So 30 ticks equals 7.5 points. And it says I can use 1 contract if I want to be risking $150. So let's just do the math. So remember, Nas is, the mini chart is $5 per tick. So you would do 30 times 5, right? And look what you get, 150. So that's how you calculate the risk management using this tool. Now, I will say this, you need to pull up the short and the long position and make sure that your template is saved, because if you go in here and you don't check that before, it could be telling you the wrong amount of contracts to use, and then you'll mess around and blow your account. So you need to click on both on, right click, click on settings, and then make sure, right? So let's say I wanted to risk, right here it says $200. So same thing. Let's say I just put my stop loss here. It's telling me I'm over leveraging, so I couldn't take that trade. So let's just do this. Let's do this. Let's go settings, and let's say I want to risk $800 a trade. Yes, $800 is a lot to risk on a $5,000 account, but that's not the point. We're just talking about the example. So now you can see if my stop loss was right here, it's telling me I can use 4.2 contracts, which is basically in my book 4 contracts. And let's just see, we have a stop loss of 38 ticks. So let's just do the math real quick. 38 times $5 equals, did I do that right? Oh yeah, I did it right. Equals $190, right? We have 4 contracts, so we need to times that times 4. Times 4 is going to give you 760, which is basically $800 if you add the like 0.2 or whatever, right? So that's how you calculate your risk management. You just have to really be aware of how much the contract that you're trading costs. Like I said, go to CME Group, click on your pair, and then click on specs, and you'll be able to use the long and short tool to calculate that. You can also do it another way too. You can also just go to trade, and then you can go to create new order. Okay, it's going to ask you to log in, but let me just log in. All right, so now I'm logged into my live account, and y'all can see how the blue and red is lit up here. And you can also change the amount of contracts you want to choose. So the other way that you can create an order is you can right click wherever you want, like wherever you want to enter at. Let's say I want to enter right here. You can right click trade, and then you can create new order. And then from there, you can kind of do the same thing. You can put how many units you want to use. If you want to do market, you can do that. You can do limits. You can do stop and then buy. And also, when you are trading, right, and you want to take partials, you will have to right click and then click trade. And you see over here, it says sell limit. That's for a partial. Or if you want to enter a trade off of a limit order, you can do that. You have your stop right here. So if I'm selling, right, if I sell right here, then my stop limit up here would need to be a buy stop. So there's that. And then, yeah. So that's one way you could do it. Now, I want to talk about the difference between a Forex chart and a futures chart, right? I'm going to pull them up side by side because people be getting freaked out when they click on a Forex pair on a futures chart, right? So EU on the right, on the left. On the right is EU's Forex chart. On the left, I'm going to put EU's futures chart, which is going to be 6E1 for the continuous chart. So yeah, here, right? So on the left side, we see that we have like price more to the tick, right? You see my line? It's like to the tick. That's because in Forex currency pairs on futures chart, they don't have the manipulation in price. Here you see a lot more wicks. It's not really to the tick like that on a Forex chart because it has the manipulation in price. Now, this is a pro and a con, right? Because it depends on what your strategy is. Me personally, I trade the manipulation. I don't trade the manipulation in price, but I trade the manipulation in price. So I need to see this chart while I'm also trading this chart. Now, what I mean by what I say when the future chart doesn't have the manipulation in price is if the Forex chart is going up and down, right? If you're actually in an order and the Forex chart is going up and down, unless there is real movement, like it's really going up and down, your P&L, right, your profit and loss on the future chart is not really going to be jumping up and down like that. It's only going to move if it's a real move. So people might not know why that's a pro and a con, but if you're in a Forex pair, right, if you're in a trade on a Forex pair, the price jumping up and down, even though it's really not going anywhere, that's going to mess with your psychology, right? That's going to unconsciously mess with your psychology. With futures, I know like if the price is moving, it's because the price is actually moving, right? If my P&L is jumping up and down, or if it's moving in a way, then I know that it's because the price is actually moving. So that's why this be looking like this versus this. So my advice is to keep a Forex chart handy while you're trading futures. Don't just be looking at this trying to trade it, unless that's just your strategy. Me, I trade ICT, smart money concepts, so I'm looking for the manipulation in price. Price being to the tick, you still get the manipulation, but it's just a little bit different. So until you get used to it, I would definitely say keep both charts open. And yeah, that's pretty much all I got. Those are the pros and cons for Forex versus futures. Like I said, I would still trade both of them. No worries. You can still trade Forex pairs on futures platform. And yeah, good luck on your trading journey if you do step into the futures world. If this video was helpful for you, make sure that you like and subscribe so the algorithm can help me help more traders like yourself. And until the next video, out. If you're looking to grow with a team full of smart money traders, click the link in my bio where I host 2 live classes every single week. I give you access to all of my trading resources, and I call the market live every single day that I trade. I'll walk the members in my Discord through every single trade that I take before, during, and after it happens, so that they know exactly why that trade won or why it didn't win. Click the link in my bio, and I'll see you soon.